Hello traders and welcome to another video review. Today is Wednesday 19th of the January 2022. Let's start with the Forex calendar review. The key event of today was the consumer price index data from the UK, and as you can see, they beat the expectations of 0.3% with the actual reading of 0.5%. This is slightly worse than last month reading of 0.7%. However, the consumer price index is still at the decent levels. The core consumer price index beats the expectations and beats the last month number of 4% with the actual reading of 4.2%. The retail price index, the same situation, 1.1% versus 0.7 previous reading and forecast, beats the expectations. It looks like inflationary pressures are right now kind of a high in the UK, so they are across the Eurozone and the rest of the world as well. CPI from Germany in line with the expectations, 5%, and Harmonized CPI 0.3% as expected. During the New York session, we have the Consumer Price Index from Canada, scheduled for release 2:30 with all of these sub-indices as well. The market expects a drop to minus 0.1%. Very interesting. And the last month reading was 0.2%. So any kind of increase from towards the level of 0.3% and higher would likely means the inflationary pressures in Canada are accelerating, and Bank of Canada policy might be changed very quickly. Building permits and housing starts from the US are scheduled for release 2:30, and later during the day we have the Treasury Select Committee hearings in the UK. One of the speakers is the Bank of England Deputy Governor for Financial Stability, John Conliffe. So please keep an eye in the afternoon what is going on with the British pound. Of course, the pandemic situation and the high inflation, highest in years, might be a very effective trigger when mixed with the selected comments from the hearings of the Bank of England deputy governors and the other workers. So please keep an eye on this. It starts 15 past 3 p.m. today. So I think we should start with the British pound, don't you think? The British pound on a daily time frame chart is following our scenario. The recent high was made at the level of let me just copy this one. The recent high was made at the level of 1.3750, and we have this very interesting bar here. We moved lower, as you can see. We're still moving lower towards the buy zone, 1.3568, 1.3605. This is the buy zone, and of course the key technical support is 1.3515. So maybe we just move a little bit lower towards this support, and then there is a chance for this market to rally higher or a bounce higher towards 1.3836. This is the high of the October last year, and 1.3915 is the high of the September last year. So one of these levels might be hit as long as market trades above 1.3515. Let's take a look at British pound to Japanese yen. The British pound to Japanese yen has almost hit the key technical resistance at 158.19. The highest high was made at the level of 1.5774. So this is about 50 pips, 45 pips miss. We have some sort of the consolidation and then decline lower. We are now heading towards the technical support around 154.89 pips. So please keep an eye on this level. The level of 158.19 is still key short-term technical resistance, and as you can see, the momentum is clearly pointing to the downside. The momentum reversed from the extremely overbought situation, and right now the level of 50 is almost hit. So some kind of a pullback is of course welcome on the British pound to Japanese yen. We should expect this market to bounce from the level of 50 on the other side, so we should find support at 154.89. Okay, so please keep an eye on this level. Of course, there is another technical support, 152.82, 152.58. This technical support is of course a little bit lower. However, it's still a strong technical support that has been tested many times already. So market recognize it, and market knows exactly where this support is located. The key demand zone is still located between 147.91, 149.02 pips on the daily time frame chart of British pound to Japanese yen. Now let's take a look at the euro to British pound. On euro to British pound, it looks like we have another lower low made somewhere at the level of 8,323. If we take a look at the situation, we can see that we slowly but surely moving lower inside of this channel. We have the situation where we have lower lows here and lower highs, which is a definition of the down trend. Right now, market have been hovering around the lower channel line for a few days already, but as you can see, yesterday's attempt to break above 8,380 has been capped, and very interesting candle has been made on this there you go, on this day. So right now I think this level is rejected as well, and the bears will defend it. So the next target for the bears is seen at 8,277. So the downtrend continues despite the fact that the market conditions are quite oversold. Please remember that if the market conditions are oversold and the market trending is moving lower, that means we are in the down trend. So please keep an eye on that. And last but not least, let's take a look at Bitcoin. The Bitcoin is apparently losing all of the chances to rally higher after a nice rebound from the demand zone, perfectly described here in my previous analysis. Today we are going lower. Right now we are just testing yesterday's low and about to break below $40,000, which means this kind of a behavior of the market participants is simply not bullish at all. The bulls are right now somewhere. Maybe they are sleeping because it's winter. I don't know. Sorry, the bears are not sleeping, and it's a winter and bears are not sleeping. That's what I wanted to say. As you can see, very increased bearish activity since the high at 69,129 dollars. So this is now a multi-month downtrend. No sign of this downtrend let's say termination. We are still moving lower. Now I will remove my channel a little bit lower because it looks like we are going to break below the level of 40,000, and the Bitcoin will trade with the first digit of 3. That means 30,000 and something. 39,540 is the next key technical support. The next is 36,520, and the last important technical support is around 28,964. And if bears will intensify the pressure and bulls will do nothing with this, then of course sooner or later, within a very short period of time, like 1 month or 2 months, we will see these levels again, because the bulls are just not doing enough for this market to rally higher. That's everything for me for this analysis. Thank you very much for watching it, and I hope I see you guys next time. So take care and bye bye.